I keep saying it because I just can't help it. And I'm sorry, but 2017, I think, is the year. This is where it all goes to hell in a handbasket. This is when it starts, at least. The very least, it starts here, exponentially increases next year. Each year, I keep saying this too, since like 2012. Each year, more exciting, more crazy things happening than the year before. 2017, which I've had to say numerous times now, is shaping up already, obviously, to surpass each of those years easily. We're not even done. We're not even quite halfway through yet. We're not even at the halfway. We're close, but we're not halfway point through the year. And it doesn't matter if nothing else happened and it was completely dull the rest of this year. 2017 has already surpassed 2016 and all kinds of things that happened then, 2015, etc. So, again, fake numbers, economy's fine. No, it's not. No, it's not. You are going to end up seeing the outrageous prices for gold and silver that I've been talking about for years, that the Webbot's been talking about. And I know it sounds absurd. I was actually having a conversation on YouTube today, which is yesterday, with some people on another channel about this, and they think it's you're crazy for thinking $600 silver is anything like that's ever going to happen. We are talking about an entire world so in debt that it's beyond the point of no return. There's no other solution than to let this whole thing implode and usher us into a new world single currency system. It's the only solution that the club wants. It's not even that they want it. They know this is how it ends. It's their system. They designed the system. Therefore, they know the ins and outs of it easily because this has been going on for centuries. And it ends with this fiat currency imploding on itself. And an absolute sheer panic to own precious metals and new age technology, cryptocurrencies, Bitcoin, Ethereum, Dash. I was even looking at Litecoin, I think. I logged into my Coinbase account. I think that I'm like, Litecoin, or is that $28 for Litecoin? Am I? Oh, sure enough. No kidding. No kidding. Really. Yes, cryptocurrencies, it's going to get flooded. When the markets really start to finally go down, when the Fed has to unleash that balance sheet, you have enormous amounts of money out there with no place to go. They've chased these bogus stocks as much as they can chase them. Stocks that should be worth, $26 are going for $400, $500 a share. They're just putting money in there because they have to put their money somewhere. Yeah, but these companies don't even make a profit. Tesla, Twitter, etc. They're not even making money. Snapchat, it's flooding out. They're worth billions. IPO'd off of billions. They're worth billions, man. Until they're not. And then where does the smart money go? First of all, in case you didn't notice, the insider trading right now that's happening, the sell-off, is massive. It's huge. And who are the insiders? The insiders, the club. Why are they getting out? Because it's a suckers rally. The suckers get in while they get out. Again, it's their system. They know exactly what they're doing and when to do it. So they're going to get out. And everyone else is getting in. Real estate. I'm hearing the real estate commercials every day to and even from work. Hi, I'm so-and-so, and I'm going to teach you. I'm going to send you my CD, DVD right away on how to flip houses and with no credit, with good credit, with no loan, with a loan. Even if you have bad credit, you can get a loan. I want you to join my team today, and I'm going to teach you. I felt like calling the number and saying, listen, what is this guy, Tony, or whatever his name is? Tony. Listen, I need to speak to Tony. Is he in? I'll pull one of the jerky boys on him. Yeah, let me speak to Brett Ware. I don't know if he's here. Is he in? I think he's upstairs repairing something. Listen, jerky. You tell him to come see me. Tony, you tell Tony to come see JSNIP 4. Tony, what are you doing? The market's at the top. You're going to just fleecing all these people. What's wrong with you? Don't you have a conscience? So, I'm going to say this again because this is an incredible deal that Silver Doctors put up for JSNIP 4 subscribers. sdbullion.com/jsnip4. It's in the description box of all my videos right now. You get it as a new customer, a 10-ounce silver bar with no premium. It is at spot price. I've never heard of anything like this in my life. It's incredible. I wish that I could somehow go on there and fake, maybe I could talk to Obama and then give me some fake ID. I need to go get myself a free bar at spot so I can buy a bunch of them. Just kidding. I would never screw those guys over. But in all seriousness, I'm telling you, this is the only thing, along with Bitcoin, cryptocurrencies, but more so precious metals. Cryptocurrencies don't have 5,000, 6,000 years of history. Matter of fact, they don't have 1,000 anything behind their name. They only have a few years, literally a few years of recognition behind their name. And they're doing great right now. My Bitcoin portfolio, if you will, at 1,700, what is it at right now? Excuse me while I shock myself. $1,720. It's only 1,700. That is 1,700. Are you kidding me? And there's supposed to be a $1,900 hit, and then it pulls back according to Cliff's data, and then it's off to 2,300. And again, if his webot's right, and it is freaking been right so far on Bitcoin and stuff, next year, it'll be over $10,000. And he said not even like late. It looks like it'll be sometime fairly early next year. 13,000 plus. Let me just tell you, if Bitcoin is 13,000 plus at that time, I'm going to say that there's probably not a chance in hell, maybe a sliver, just to be fair, but probably not, that gold and silver are going to be, silver's been knocked down to 1625. And there's millions of ounces right now, according to Harvey Organ, standing for delivery, in the face of the club smashing silver over and over again, hoping to flood those guys out and push them out of their contracts, sell the contracts. And they're not selling them. They want delivery. They push the price down right now again. It's 1625, I think, right now. And these people, whoever these are hanging on to their contracts. No, we want delivery. We want the goods. November 2014, CME Group changes the rules, puts in circuit breakers for gold and silver. Why? To stop it from going down, to save poor little schmuck, you and me, so we don't get hurt too bad when the price goes down. We're playing paper contracts, considering hardly anyone plays those paper contracts except for the club. Not in your life, not on your life. It's so that when the price goes ape higher, circuit breakers triggered, you can't trade for 15 minutes. Got to cool off. Okay, markets are open again. Up, circuit breaker triggered again to slow the tide. And it's not going to be a tide, it's going to be a rocket ship. I'm telling you, the webbot has said, watch for $2 a move per day, silver. Silver moves $2 in a day. First sign that we're getting close. Next sign, $5 a day moves. And then after you see that, if you have the opportunity, I'll just say this, to load the boat somehow with silver, you better hurry up and do it at that point if you haven't already. Because $20 a day moves will be coming. And it will be because of the sheer panic to own it. And while most, I shouldn't even say most, while there's going to be some of us that know I need physical silver, other people, I'm just going to go buy SLV and I'll get some ETF that's related to silver and they're going to flood the paper markets too with silver orders. So I'm just telling you that. And you have an opportunity right now to go SDBullion/JSNIP4 and get a 10-ounce bar at spot price as a new customer. New customers only, according to them. And they were nice enough to let that ad go, that coupon go again for this month, because it was for actually not last month. So that's cool. I got to tell you, that's awesome. So back onto some data that proves I'm not just coming out here to speak and tell you about this bad economic condition that's right around the corner. It really, really looks like it's right around the corner. Quite possibly, as I said, later this year, the bulk of it hits hard. But we're or Trump did, fired Director Comey. He's cleaning house. Is the club just going to sit back? Or are they going to say, oh, you're going to do that to us? You know what, guys? Let the markets loose. It's May 11th. It's May 11th coming up. That one guy? Yeah, listen, let the markets loose. Trump will take the blame. I've had enough of this damn guy. Let him deal with that. We don't have time for him to be picking our guys off inside, our inside guys. Let's let him deal with an economic crisis of epic proportions so that he has to stop draining the swamp. He'll have to focus on that. Think about that. Anyways, this is wolfstreet.com, Wolf Richter. Consumers/spending growth expectations to lowest level in Fed's data. To the lowest level, I guess, ever in the Fed's data. Something embarrassing is happening to the wallet. No, we're not talking about cryptocurrencies. Your actual wallet. Consumer spending, not just retail, but also healthcare, housing, tuition, and so on, accounts for 69% of the U.S. economy. Decent economic growth without growth in consumer spending is practically impossible. That's why everyone is watching consumers. And everyone is praying that they'll spend. They'll have to spend above the rate of inflation for real growth, adjusted for inflation, in order for that to happen. But that might not be happening over the next 12 months, according to the self-same consumers. This isn't from a wayward blogger spreading some kind of homemade doom and gloom gospel, but the New York Fed. It just released its monthly survey of consumer expectations, which covers inflation, the labor market, and household finances, including income and spending expectations. And concerning spending expectations over the next 12 months, it found this embarrassing data point. Median household spending growth expectations dropped sharply from 3.3% in March to 2.6%, the lowest level observed since the start of our survey in June 2013. The decline was fairly widespread, but largest among lower education, high school or less, and lower income, below 50,000 household income, respondents. So that's bad enough. But in the same survey, inflation expectations rose to 2.8%, thus higher than the spending growth expectations. So in other words, spending growth is expected to be less than inflation, which would leave real spending growth in the hole. Income expectations rose, but only by 2.8%, same as the expected rate of inflation, in the fervent hope that any income increases might keep up with inflation. This fervent hope has been frustrated too often. Median household spending growth expectation for the coming 12 months looks like this, and we will take a look. This is 2013, 2014, 15, 16, and 17. Ooh, it is not looking good right here. See this right here? It's 2017, boy. It says not looking good. The spending growth expectations by income level are even more interesting, though the data is volatile and noisy. In the chart below, the red line denotes growth of spending expectations by households making under 50K. Median household income in the U.S., half earn more, half earn less. It's currently $58,600. So these folks aren't that far below the median and make up a big part of the population. And note what happened to their spending growth expectation. It plunged from 4.5% down to 2.5%, which is the lowest in the history of the survey and below even the rate of inflation expectations. Incredible. But even those earning above 100K, the biggest spenders who can move the needle, they too are trimming back their spending growth expectations to the lowest in the history of the survey, to 2.7%, just below inflation expectations. This extends the trend that has been going on for years. The middle brackets, those making between 50K and 100K, slashed spending growth expectations also to 2.7%. But they were the only group not setting a new low in the data series. These survey results from the New York Fed don't particularly match the results from recent consumer sentiment surveys. which have soared to exuberant levels after the election, divided sharply along political lines, though actual consumer spending has gone the other way. The New York Fed's survey results, however, parallel more or less roughly the recently very lackluster actual consumer spending that dragged down the first quarter GDP to the worst levels since quarter 1 2014. This consumer reluctance, or inability, to spend more is already percolating through the auto sector, despite record incentives. 8,000 cash back, 0.1% interest. Despite record incentives, and again, when he says record incentives, he means it, because I read the article not that long ago that proved it and had the data. An incentive. We used to give 3,000 cash back. Now we're giving 5. Now we're giving 8. We never did this before. Now we're including that. We have to add that too. That's an incentive. Come get this car, please. We're like 90. Was it on average? What it used to be like, cars would sit on a lot. Brand new cars on a dealer, 60 days, then 70 days, 71 days. Now it's like 90 days or something, somewhere around there, before they can finally sell them. Oh, in the Ford factory that produces pickups, they're shutting that down recently. Heard that too, because lackluster sales. The consumer reluctance or inability to spend more is already percolating through the auto sector, despite record incentives, which should stimulate auto sales. The decline in sales is picking up momentum. And for more information, he says you can read Carmageddon. Not yet, but hot air hisses out of the auto bubble. And as usual, I'll be posting this link on my description box. Again, I just want data. I just want data. I don't want noise. I don't want lip service. I don't want any nonsense. I don't want people reading from a script in front of my face on TV like it's great. And we created 220,000 jobs were created. What about the people who quit looking? Well, the birth-death model. What about that? Who cares about that? That's what we use. The birth-death model helps us come up with these fantastic numbers. 4.4% unemployment. Unemployment level, 4.4%. How are there 46 million people still, somewhere around there, still on food stamps, when in 2007, before the crisis, that number was 24 or so million? It has practically doubled after 2008 through 2009, even past April 2009, the official recovery. 2010, 11, 12, 13, 14, 15, 16, 17. We're in 17. We're almost halfway through now. And that number is still there. You cannot have 40-something million people on food stamps and simultaneously come out tooting your horn, 220,000 job growth this month, 4.4% unemployment. Yeah! Not a chance in hell. Not a chance in hell. Take care.